Hi there, my name is Wagner and Lessa, and let's talk about promoting the deal of Eneva and acquiring Vibra. These two are Brazilian companies in the energy sector, and when we go over the transaction key terms, let's first look at the deal type. It's a stock for stock merger of equals, and the proposed date was in November 2023 on the 26th, as well as the first rejection date was in November 28 of 2023, as well as the exchange ratio was unspecified but deemed unjustifiable by Vibra, and the regulatory approvals are required, as well as other conditions are pending for new offers. When we have the firm's business strategy for Eneva, which is the one that is acquiring or intending to acquire, we're gonna have mostly for growth and expansion, the focus on expanding thermal power plants and increasing EBITDA, as well as diversification. It's interesting to see how investing in renewable energy and gas distribution, as well as into the financial health for strong growth projections with new thermal plants and expected to double EBITDA by 2027. The strategic rationale of Eneva is to leverage Vibra's cash flow to fund high ROI investments. Nevertheless, the target firm's business strategy, which is Vibra, lies into cash generation, focus on fuel distribution in which high revenue but low EBITDA margins. It has dividend policy which tells a lot about the business, and that's one of their many things where they distribute a significant portion of the cash as dividends, as well as their market position. They are a major player in fuel distribution with a substantial market share. It's interesting to see that the strategic considerations need for diversification due to the potential decline in traditional fuel business is increasing with electrification. This is interesting to see how it plays in the Brazilian market, because when those two combined, we can see the justification of the offer price. Those two businesses combined would be competitive among all the other companies in the energy sector of Brazil, and they would be most likely within the top three of the main that are also nationally backed by the government. When it comes to the justification of the offer price, we have a standalone value of Vibra around 160 billion reais in revenue, and that's 4.7 billion in EBITDA with 3% on EBITDA margin. Nevertheless, the standalone value of Eneva it's around 8 billion reais in revenue and 4.3 billion EBITDA with 50% EBITDA margin. Nevertheless, on the justification of the offer price, we also have the synergies, and that's why it's important for this major where we're going to have the financial synergies, the combined EBITDA expected to grow significantly, the operational synergies to enhance the scale in renewable energy projects, and the strategic synergies complementing the strengths of Eneva's growth profile with Vibra's cash generation. That's why when we have the acquisition fit Eneva's needs for the strategic fit, aligning Eneva's goals to expand in renewable energy and gas distribution portfolio, as well as the financial strength, utilizing Vibra's cash generation to fund high ROI projects accelerating growth, the market positioning creating of the third largest energy company in Brazil by market value, and governance, where we will be resolving internal conflicts, providing a unified strategic direction. Thank you very much.